Hello everyone, welcome back to Grow Machine. The topic we are going to discuss today is something which is close to an investor's heart, the answer for which an investor searches his entire life. Me as an investor have been searching the answer to this question since past 7 years. The question is how to spot the right stock at the right time. You know, this is something which every investor searches for. And today in this video, we are going to cover this question basically in two sections. First is how to identify the right stock, and second will be even if we have identified the right stock, what is the right time when we should put our hard earned money into that stock, right? Um, you know, I meet a lot of investors on a daily basis, and the people who are more experienced than me, I really love talking to them and understanding their investment journey and the challenges they have faced till date. And this helps us, and this helps all our audiences, I mean people who are part of my team, to understand that there are so many things involved in understanding that one simple price movement. I mean, how does it go up, how does it come down? But before that, I would request all my viewers to please subscribe to our channel and click on that bell icon to get latest updates. We always say, let's get started. Welcome back everyone. So before starting anything, let us discuss about a few of the problems that are actually the major issues which lie while identifying a good stock and identifying the time at which we should invest in it. So the biggest problem lies in the fact that by the time good opportunities are identified, more than half of it is already purchased by early buyers. I talk to so many of my friends who are new to investment and especially investing in stocks, and they say that I track it for 5 days, and in 5 days I see the price rising to a certain point, and on the fifth day I make a purchase, and then on the sixth day I see the price falling. So I'm sure people who are watching this video and who have already burned their hands in investment, right, must be able to relate what my friend meant to. And to be very frank, this is something which all of us have faced, right? Now, before getting into it, the major problem that I personally feel that is currently in this market is, number one, that there are huge number of stocks in the market. So to identify which is the right stock is itself a big challenge. And number two, there is large amount of information available for each stock. So, to derive that information, to analyze it, and to understand how to actually, whether that information is sufficient for you to predict what is going to happen tomorrow or maybe a month later or maybe a year later is really a difficult job. But yes, we are definitely going to answer all these questions in this video. Now, I personally go do it in a very step-by-step approach, and I also recommend people who are getting trained under me to follow the same. The first step, which I personally recommend, is to identify the industry that is performing. Identifying the stock might be difficult because there are huge number of stocks, but identifying the industry is not that a difficult job, because you just need to understand what is the need of the hour and how the industry is responding to that need. Let's take an example of recent times. Now, if you see, the current pandemic has led to a rise in the pharma sector, right? And companies in pharma sector are working on vaccine, they're working on manufacturing sanitizers, they're working on manufacturing masks. So this is leading to a trust from their investors, and this in turn leads to a rise in the overall average price of the pharma industry. But do you think all the companies are growing? No. Now, as I said, that there are so many industries, right? And there are particular industries which a person should track. You should not be tracking all the industries because it might not interest you, right? There might be a profit scope, but it's always good. And I personally advise all the people who are getting trained under me to actually go for industries in which they are currently working, because that gives them that motivation to know more about the industry, and in that process they also understand the overall nature of that particular industry. And some of the industry types that I personally trace are banking, healthcare, automobile, IT sector, insurance, right? And so now that we have identified the industry, right, which is performing, so let's say the way I gave you the example of pharma sector, so now it's time to identify the target companies. Now, you know, when you say the industry average is increasing, what does that mean? So it means that the number of companies which are under that particular industry, there is an average price that is taken on a day-to-day basis, and it depends on the rise and fall of that price that we derive that whether the industry is overall on an overall basis, whether it's increasing or decreasing, and that's how we basically derive a conclusion, right? So now that we know that our industry is increasing, the next step is to identify the target company. Now there are three major tips which I would like to give all of you while identifying a good company. Number one is understand its strategy. So understanding strategy can be from any sources, right? The major sources which I personally feel are good enough are: number one, you can get it from any news channel, you can get it from any news app, because strategy doesn't mean that you go to their website and check their about us page. That is also a primary source where you can get it, but that is something which is the company's point of view, right? And when you see a news channel or when you see an application where you can get a day-to-day basis updates on how the company is doing, let's say there is a company, let's say there is an automobile company who is trying to get into that EV space, electronic vehicle space, right? And they are working on a very new technology which is going to mostly change the overall picture of the automobile sector. So these kind of things, these are certain strategies which we need to identify as investors, right? The second point is check the upcoming initiatives and assess its impact. When you open any news app, or let's say open a money control app, and check the company, check the stock of a company, you will see that there is a section which says news, and there are so many the regular updates of what's happening in the company, who is getting, let's say the chief operating officer is fired or maybe left the company, or maybe there might be a CBI case against the company. So all these small informations are actually very critical information for any investor, because the investors basically they build their trust based on these simple facts, right? The third point is, if it's a new company, look for promoters and assess their profiles. So investing in an old company, fairly okay, because you will have a decent idea about it. But when it comes to investing in a new company, now that is when it becomes a bit tricky, because you need to understand who are the promoters of the company. Do they have any history? If they have any history, how have they performed in their past? If they haven't and they are pretty new, I normally observe them for a few months, right, before actually jumping into, because you never know. There are many companies who are launching their IPOs and who are coming into the stock exchange list, but not everyone is performing, right? Okay, so now that we have identified the target companies, the next step we have is to assess the metrics and track the stock price. And metrics is something which is very critical, right? Whether you are a professional, whether you are a working professional, or whether you are owner of a company, metrics is something which gives you a picture of how your product is performing, how your company is performing, maybe how your strategy is doing, maybe how your marketing is working. So all those things are done using these metrics data, right? And metrics are nothing but investors' helping hands while buying or selling any stock, right? So they give a picture of critical decisions that the company has made and how have those decisions impacted its stock price. So when you track a metrics, so I have a detailed metrics cheat list which I normally share it with all my viewers, all my team members who are currently getting trained under me. And to check out that, please email me your concern, and we will revert back with a list of matrices that basically needs to be tracked upon. I mean, when it comes to a stock, you open the website and you'll get hundreds of matrices, right? Hundreds of matrices, but it's all very required to understand the significance of each of those, right? And that is when we come in and we help you assess those matrices and track the stock price in a very detailed way. Falling of a stock price doesn't necessarily mean that the company is not performing, right? And I know people who are new might be wondering why, but yes, that is a fact. Okay. Now, once we have assessed the matrices and tracked the stock price, the next important thing for us is to identify the right moment to invest. This is the most critical thing that any investor faces. But yeah, let's simplify it. Now, to understand this, I personally follow a two-step process. Okay. So there are certain parameters which I basically grade my company into. The first is durability, right? Now, see, durability is something which I personally feel matters much, because when let's say the company has introduced a new strategy, right? And that strategy has led to a rise in the stock price. The investors are happy, and the stock price is rising. If you see a fall in the stock price in, let's say, a month or a 2 months time, that is when you get worried, because that is when you feel that this strategy was not a long-term one. It was kind of a short-term one, and which is not going to work much. So you need to have strategies in line, so that like, let's say, for example, when Google launched Android, right? Even when Google launched its Android version 1.0, I'm very sure it would have already designed Android 3.0 or maybe 4.0, right? Because if you don't have that, then probably definitely you're going to become dinosaurs, right? And your stocks are not going to rise for sure. But yes, Android is coming. Android is giving regular updates, and these regular updates which we get on our smartphones, these are nothing but real good factors for people to have trust on Google and have trust on the technology that they are into, right? The next point is valuation. Valuation of a company is very much important, and when it comes to valuation, you need to always track how the valuation is changing over a period of month or maybe a year even, right? For companies who are small scale, maybe a year, but yes, who are large scale companies, you can definitely keep a month on month track on how the valuation of that company is changing. The third most important factor is momentum, right? Momentum is very much required. So how the company is progressing, is it progressing, let's say, is it coming up with a strategy every 6 months, whether it's coming with a strategy every month or every day? How is it performing? I mean, I usually see a lot of smartphones getting launched by Samsung nowadays, and I personally get confused, because every month they have a new smartphone launch, and it becomes really confusing on any person who is going to buy the smartphone to actually decide between a 16K smartphone and a 25K smartphone, because they look same, maybe with a camera difference, a processor difference. But yeah, I mean, there are so minor differences between smartphones with a price range of let's say 15K to 30K. It really becomes difficult. So that's what I talk about, that these companies like Samsung, let's say, so they come up with new smartphones every month. So that is their strategy, how they want to cater to that price segment, or maybe cater to a particular segment of customers who want a bigger battery, or maybe a segment of customer who want a better camera. So people can prioritize based on their needs, right? So That was my first step. And the second step which I follow is do a SWOT analysis of the company. And this SWOT analysis is not done once, it's basically done on a monthly basis, because you need to understand that when you're doing a SWOT analysis, the strength the point which you're categorizing in the strength might become a weakness after 1 month, or maybe it might become a threat as well, right? And maybe you might feel a statement as a threat. Maybe the team is quite innovative and quite new. This might be a threat, but this might turn out to be the greatest strength of that company. I mean, you never know. New minds are always so fresh, and new minds always give the most innovative ideas. And that's how it is. That's how it's happening across sectors. So once all the above tasks are done, then the right time comes when we have the most favorable conditions. you know uh, when it comes to identifying the favorable conditions, that is something I cannot cover as part of this video, because that is something I really take detailed classes for all my students. And I personally believe that any of you who want to join my class, please log into my website and register. So once all these things are done, now we will do the main thing, that is invest and observe. So observation is something which is a daily work for any investor, right? And observation is very important before investing in a stock, and it is even more important after investing in that stock, because you need to understand, because investing in a stock doesn't mean just buy and sit back, right? It's also about selling, because once you sell the stock, that is when you actually take out your profit. So once you buy it, you need to track it. You need to ensure that your stock price is rising. And the moment you feel that matrices are somewhere showing a negative signal and it's going to fall, that is when you are going to take another call. And the call will be that, is this factor which is going to which is going to lead to a decline in the stock price, is it something short term or long term? If you feel that it is a long term thing, then please come out, sell all your stocks and come out of it. And if you feel it's a short term thing, stick to it, wait for some time, market will revive, don't worry, right? So as I always say, investment in stocks is a long term process. One of my investment gurus had already told, and you read any book from Warren Buffett, they always say this thing, that they always invested in stocks and they left it for next 10 years, and only after 10 years they used to see that. But those times were different because it was really difficult to keep a track on the prices. But now things are changing. Now things are really quick, and you can have a minute to minute tracking of how your company is performing, how its figures are changing, how things are going good or not, right? So these are certain advantages, and at the same time these are certain disadvantages, because people get really curious about whether they are going to win or lose, and that makes them take some hasty decisions, which at time backfires, right? And I would certainly recommend you not to do those things. Have a balance, invest rightly with the right knowledge. And you know I will always tell it to my students, investment has nothing to do with luck. Investment is all about knowledge and timing. If you have the knowledge, and if you know when to apply that knowledge, where is always a big question, but when it comes to investment, when is a bigger question. So if you have knowledge, and if you know where and when to apply that knowledge, you are the champion, right? So thank you for watching this video. Please like this video, share it with your friends, whoever wants to learn, and please visit our website if you really want to know more about it.